Welcome back. This is the 17th video in our Squeeze Setups onboarding series. And in this video, we're going to talk about a key concept, risk management. I'll share 3 key risk rules that have worked for me, and you can pick and choose if they are something that you'd like to apply to your trading. Now, the first thing before we get to risk management, I want to share the 2 downloads that we have available for you. To get to the download section, click on your username below, and then select Account and Billing. On the screen you're taken to, select Downloads, and there you'll be able to see the 2 different downloads that we have available. The first is a 1-page trade plan PDF. This is really handy to print out and just leave as a reference on your desk. I found it's nice when you either have a brain fog, you forget what the setup is, you forget what you're looking for, what an ideal setup is. The trade plan helps keep the guardrails up. Number 2, the spreadsheet. This is a trade journal spreadsheet, and this is crucial in helping you analyze, understand your trades, and also earn a bigger percentage of your portfolio in terms of the risk you give each trade. Now that's a good segue into our 3 different risk rules. So let's start with rule number 1. Rule number 1, decide your risk before you enter a trade, not after. Don't trust your gut feel, anything of that nature, trying to see what is an A+ setup based off of your quote-unquote interpretation of the charts. We're looking for a long string of trades where we can let the probabilities work themselves out. Number 2, size the position from that risk that you're willing to give a particular trade. In my case, I like to start off a strategy with something like 0.5 to a 1% of my equity per trade. That means my position or my risk on that position is very much defined, and the math is simple. Your share count equals your risk dollars divided by the distance from your entry to your stop. So if you're risking, say, a fixed dollar amount and your stop is a certain distance away, well, that division very clearly tells you how many shares you could buy or could short. That position size gives you your risk, not the other way around. Finally, number 3. Set the stop wide and let the squeeze do its thing. Give the trade some room to work itself out. Our catastrophic stop on this particular setup is a 2.5 ATR, and that's purposefully wide. We've tested a tight 1 ATR stop. We've tested fixed target and stop variations. Every single permutation we tested found that it underperformed to simply waiting for the squeeze to fire. So if you were to use this as an analogy, the actual trade, the goal that we're looking for is waiting for the squeeze to fire. The wide stop that we have of this 2.5 ATR is really just our seatbelt, if you will, to make sure nothing bad happens along the way. Now, I found it's also important to trade journal and document every single trade, especially when you're new to trading or at the beginning stages of a new strategy. Write down what the trade was, what you were seeing during the time of the trade. You'll see our spreadsheet makes all of this incredibly easy with a very clear, systematic way of documenting every single trade and how you managed it. Over time, that journal is what you will find helps you see what patterns are best for your trading style. Which ones do you excel at? Is it the slingshot squeeze? Is it the squeeze signal? Is it both? Is it waiting for shorts, longs, waiting for particular market stages? You'll find all of that data particular for your trading style that you can use to better train your strategy. So let's bring it all together. Inside of our platform, we have 2 different downloads available to you, the trade plan and the trade journal spreadsheet. Both of these are designed to help you with risk management. We talked about 3 key risk rules that I like to follow in this video. The first rule that I shared was making sure we have a defined risk for every single trade. We want to decide this risk before we put on a position, not after. Number 2 is with that defined risk, we then know what the share amount is and we can do the math. So follow the math. Don't try to break the math here. And number 3, set the catastrophic stop and let the trade actually work itself out. Give it room to work itself out. Hugging it too tight and not waiting for the squeeze to fire, we've found is not a profitable strategy. In our next video, we're going to bring everything together, summarize all that we've covered inside of our squeeze platform, and take a look at the live markets. See you in the next video.